In today's class, I'm going to show you how you can enter very profitable trades with fair value gaps. Yesterday, I shared what fair value gaps are, and in fact, yesterday night, I shared a trade I entered with fair value gaps that was profitable. You can go check out the video. So, in today's class, I will share how you can enter very profitable trades with fair value gaps. All right, but before we do that, I'm going to just quickly recap on what fair value gaps are. This is a bullish fair value gap and this is a bearish fair value gap. A fair value gap is the space between the top head of this candle. You can see this is the candle's head. Okay, the top head of this candle and the tail of this candle. Okay, and the tail of the third candle. Just imagine that this candlestick is not there. The head between the space between this guy and this guy, this rectangle you can find here is called the fair value gap. Okay, this gap is called the fair value gap, and this is a bearish fair value gap. The tail of this candle and the head of this candle, the space between them is called a fair value gap. Normally, when trading, price action is not supposed to have fair value gaps. But when there's a fair value gap, then price can actually come back to that fair value gap in the future. Now, what you do when price comes back is how you can measure your profitability. I shared about fair value gaps yesterday, so go check about it. Today, I'm just going to show you how you can enter very profitable trades with fair value gaps. And yes, you can do it with your phones. All right. In fact, I basically use my phones to trade more, but I also use my system to analyze what or how to enter. So if you have followed my trade for fair value gap, my teaching for fair value gap, you know that this is a fair value gap here and this is a fair value gap here. All right. Now I'm going to measure the. I'm going to just draw the fair value gap so you can see what it means. Okay, I'm going to use my rectangular this thing to draw the fair value gap. You can see the market was coming down, but it formed a fair value gap here and another one here. So let me draw this first fair value gap. I'm going to just draw it like this. Okay, remember that when you saw the fair, I'm going to padlock it so it doesn't shake. Okay, remember that when you saw this fair value gap, this place has not been printed. The market has not gone down yet. This is just where you found it. Now just draw your fair value gap. Now another fair value gap formed here. I'm going to still do the same thing. I'm going to draw another rectangle here. You can see you have two fair value gaps just beside each other. I'm going to do another rectangle here, guys. So what I'm going to do right now is to just relax and wait for the price to enter into any of these fair value gap. Now somebody will ask, when the price enters, should we just take it? You can see the price entered and started going down, but you don't just enter blindly. Today's class is going to be how to know that you are supposed to enter, because it is, you cannot just enter when the price enters into here. Okay, not all fair value gaps are valid. There are invalid fair value gaps and there are valid fair value gaps. If you enter a trade in a valid fair value gap, it's going to reject the price, and for me, I can enter a short trade and I would have earned some profits here. I shared a video about some little profits I made with fair value gaps yesterday. You can go check it out with my phone. Okay, now there are other fair value gaps that you can enter and it is going to be invalid. The price will just be going up. So how do you know that this is going to be a valid fair value gap? Now this is a 1 hour time frame. You can see this is a 1 hour time frame. I believe if you are using a 1 hour time frame, you can use a 15 minutes time frame to know to measure your fair value gaps. Okay, to see your trades, to enter your trade, sorry. Okay, so I'm going to go down. I'm using a 1 hour time frame to see this, so I'm going to go down to a 15 minutes time frame. If you're using a 4 hours time frame, you go down to a 1 hour time frame to take your trade. So I'm going to go down to a 15 minutes time frame, although I prefer using a 4 hours and a 15 and a 1 hour time frame to take trades. But I'm going to go, because I'm using a 1 hour time frame, now I've gone to down to a 15 minutes time frame. Okay, so here in the 15 minutes time frame, this is what you can see. The price came down and you just wait for the price patiently to enter into this place and form another fair value and form another bearish fair value gap. This is a bearish fair value gap that we marked, don't forget. So the price entered here but did not form any fair value gap. It came down, entered there, did not form, entered. Now this was where the price formed in the first If I zoom in, you see that this is a bearish fair value gap, and this is an indication that I should enter a trade. This is when you now be like, oh, this is the right time to enter. The price formed another bearish fair value gap in the smaller time frame. So I would have entered the trade here and the price would have gone down. Even if it did not enter here, this is another bearish fair value gap that you should enter. So the name of this strategy is like a fair value gap in a fair value gap. All right. In a bigger time frame, we saw a fair value gap on a 1 hour time frame. Then we went down to a 15 minutes time frame to confirm that we are supposed to enter this trade. Now, the price went down and entered into this place, did not form any fair value gap. So this is not a time to enter. And yes, some people would have entered there and made some profit, but I want a proper confirmation. And I want the price to form another fair value gap that is bullish inside the fair value gap of the 1 hour time frame. And here we saw a confirmation. The confirmation is that the price is going to print another fair value gap, bearish one, and enters there and were rejected here. You can see. So let's quickly go to another example. I'm going to show you. Let's go to the 4 hour time frame, guys. Let's go to the 4 hour time frame. This is the 4 hour time frame now. Okay, so beautiful. This is a massive fair value gap. You can see this is a massive fair value gap. This one is a massive fair value gap. It's a very big one. So I'm going to use this. Now, like I told you, there are valid fair value gap and there are invalid fair value gap. Okay. In an invalid fair value gap, this strategy will show you that you should not enter a trade. I'm going to draw the rectangle well. So forgive me if my rectangle is not too straight. Oh no, no, no. I'm not drawing this rectangle very well. So forgive me. I have to draw this guy very, very well. Okay. It's not giving me what I want. Okay. Yeah, it's giving me what I want a little bit. So just a little bit. I'm going to extend it a little. I just want to extend it a little bit. Okay. Okay. I've gotten what I wanted. This I've drawn my. I'm going to lock this. I'm going to lock this. Okay, so that it doesn't shake. So I'm going to delete these former ones. Don't forget, I'm deleting this one so that I will not be confused. Okay, so that the chart will not be confusing. So this is your fair value gap on your 4 hour time frame. Once you have noticed the big fair value gap on 4 hour time frame, draw it like this. Okay, draw this the gap. Draw this gap. Now you can see the price entered and was rejected. So we're going to go down to a 1 hour time frame to get our confirmation that we are supposed to enter that trade. Now our confirmation is when we see a fair value gap inside that bigger inside this whole box. So this is where we drew it. We're on a 1 hour time frame, and guys, we can see the first big red fair value gap was here. So this is a sign that we could have entered this trade on a short trend, and you can see the price will start going down. So this was our confirmation, guys. This was our confirmation. Our confirmation is that we saw another red fair value gap inside the bigger red fair value gap. Now I know some people will not understand this, but some people who can understand what I'm saying would know. But I'm going to put it in such a way that you drew a fair value gap on a 4 hour time frame. Okay, but the price entering is not a reason for you to take a trade. When you should take a trade is when the price has formed. You go down to the 1 hour time frame and watch out for the price forming another fair value gap, a bearish fair value gap on the 1 hour time frame. Okay, the price retested it and this is what we got. So let me do one more example. I'm going to just delete this one so that I will not be confused. Don't worry, I'll be showing you different trades I'm taking on my phone. I've shared one yesterday. You can go check it out. In fact, I shared two. Okay, so let's go back to the 4 hour. Yeah, you can even use one day. Yeah, you can do it for forex and you can do it for spot trading also. So guys, let's check out for another one. Beautiful. This is a fair value gap. This is a fair value gap, guys. This is a fair value gap. You see fair value gaps everywhere. All right. So let me just draw. Now take note that some fair value gaps are invalid. The strategy will not work if the fair value gap is invalid. So you have to, the only time the fair value gap is valid is when you find another fair value gap inside that 4 hour time frame. You understand? If you don't see any fair value gap on a lower time frame, even if you see on the higher one, don't take the trade. Okay. So I'm going to lock this and go down to a, you can see the price came inside this box and was rejected. So we want to, the price has entered, but we're not sure. Let us go down to the 1 hour time frame. If we find a bearish fair value gap on the 1 hour time frame, we will take our trade. So here on the 1 hour time frame, guys, this is where we marked and the price was playing, and you just relax, don't panic. You can see this is a fair value gap, a bearish, sorry, a bullish fair value gap, but leave it. We are looking for only a bearish fair value gap, don't forget. So it has entered. People who entered here would have made some little profit, but I want to be very sure of what I'm doing. So you wait for it to form that bearish fair value gap here. You can see once it has formed it, you enter into your trade. This is just the confirmation of what we are looking for. This is a fair value gap, but in fact, it's not even a fair value gap. This is a fair value gap here. This is what we are looking for, and would have entered the trade here, the price would have come down. So this is a very, very important strategy that you can use every day. Okay. And trust me, there are so many things I'll be rolling out, and I want you to just pick out these strategies one after the other, because in the future, I believe we'll be talking about a lot of trades, how I enter them, how I made some little profits from them, or if it doesn't go well, I'm going to also share. Now, trading is about profits and losses. All right. At the end of the month, you fear if you are using a right strategy like this, a good strategy like this, you find out that you have made a lot much more profit than you have lost. Right? You can make more than, like, you will see it on your everyday trades. All right, because I've been using this strategy for a very long time, and I just decided to start sharing some little tips that can help you if you are growing your capital or you're growing an account. All right, now if you're doing forex, you can use it. If you are doing crypto, you can use, in fact, I use it majorly for futures. I trade just futures and sports, and I also trade futures and sports, and of course options. Okay, so this is also very good for forex. A lot of people use it for forex, and of course one of the strategies I learned a very long time ago, and this works so well. So I don't want this video to be too long, and I'm just glad that I've passed my message, and of course I'll be showing you some trades later in the day about how this can make your trade very, very profitable. I'll see you on another one, guys, and do have a very wonderful